Good morning, Trade Pros. Sound check 1, 2. I hope you guys are having a fantastic start to the morning, and I hope you're ready for a great day because it's going to be a wild one in the markets. All right, and just to forewarn you, today is the kind of day that when I used to trade news, would start out with optimism and excitement and a little bit of nerve because I knew there was going to be a lot of volatility, a lot of movement, and oftentimes it would go good, and other times it would go bad. The times it went bad, it went really bad. And the times it went good, it went all right. And so really for me, the decision was to not trade news anymore. And the reason was I started getting too many gray hairs. I ended up having kids that I love and want to be here for. And as part of my health cleanse, it was the decision to not put myself in these situations if I didn't have to, right? Because volatility is wild. It gets crazy. And yes, there's traders that trade the news. But I like the saying, there are old traders and there are bold traders, but there are no old and bold traders. So I want to forewarn you today that you got to be a bold trader to trade the news. And the worst way to trade news events is to trade it as soon as the news drops. The best way to trade it, if you are going to trade it, is to wait for the news move to happen and either fade the news move or wait for the pullback and don't fade and jump on board the continuation of that move. The thing you need to know about Fed Day, because today is the Fed Day, is that Fed Day moves will usually happen right at 2 p.m. when the when the rate cut is announced. That you get the statement, you get the SOP, the projections, all the data gets released together at 2 p.m. That data is combined into one market bias. And the way you combine that data into market bias is very subjective. All right, but there is meaning to it. And a lot of times you can only know after the fact why the move happened. But it's too late. After the fact, the opportunity to trade it has already gone. So the way you trade news events is you don't care what the news actually is and you look at the market. Don't try to think where the market is supposed to go based on your interpretation of the news, because there's bigger, smarter, and better traders than us every single day whose job it is to do the exact same thing, and they get it wrong. So I'm not trying to compete with them. I'm letting them move the market, and I'm looking at the market sentiment and executing based on what I see. If you're going to trade the news, cautious. That's how you do it. Don't trade what you think should be happening. Trade what is happening. Trade the real time. Trade the right side of the chart. Trade the actual development of the live auction. Don't trade your expectation of where prices are to go. Because that game right there, for news, that game ends only one way, and it's a bad way. Because with volatility trading, you could have 30 sessions in a row that you've done good and in one session lose it all. If you're an emotional trader or if you're somebody who hasn't really locked in the discipline yet, skip. It's a must skip today. If you are somebody who has the discipline, then the volatility craziness probably isn't going to be something you excite yourself to jump into. So I'm just giving you the forewarning, and now we start the morning market update. All of that was just a warning. And obviously, now I can't find my notes. There they are. All right, market snapshot. U.S. futures are slightly red across the board. We had an order flow event this morning in pre-market. We see some market sellers that got trapped into the lows that converted to buyers to get out of the position. So we see a stuck short rally. I think some of that sentiment carries into the morning. But markets are red across the board. 10-year yield is 4.2%. Crypto's a bit stronger this morning. So is Ethereum. And copper is just to the moon. Copper just continues rallying. Today is FOMC rate decision day. I'm going to focus the majority of the update on that, but I'm not going to focus on the things you already probably have access to in the data. I'm going to focus on the trader interpretation of it and what could happen. All right, first, let's cover the things I told you I wouldn't cover very quickly. Expected rate cut of 25 basis points to 3.5 to 375 range is done. All right, it's a done deal pretty much, we think. 90% priced in. All right. The descent risk is very high. Several policymakers disagreed with what was happening, and it wasn't a unanimous decision with the Fed. They were all over the place. There's internal disagreement and struggle at the Fed. That's partially due to the fact that there's a lot of missing data from the government shutdown, and they're making decisions without having information. Okay. So, again, cuts expected. All right, Bank of America notes markets are expecting a mid-cycle adjustment with more easing than the Fed may deliver. So the markets are kind of already hoping for more than they're likely going to get. Fed deeply divided, like we said. potential for 4+ dissenters, or even 3-way split between a hold, cut, and a 50 basis point cut. Meaning that not everyone's on the board here. There's as many people that agree with the cut as the ones that don't. And Jerome Powell is the deciding factor in this situation. High dissent is automatically likely. The more dissent you have in a decision, the more unlikely that decision is to be representative of more of what's coming. It seems like a one-off Fed meeting with little direction for the future. This is what's happening. So Powell's message is going to be the biggest market driver. He's got to balance soft labor market data with missing labor data, all right, within the committee. And hey, Zay, what's up, buddy? And Isaiah comes in. Hi, my son. We're talking about Jerome Powell and the Federal Reserve. Let me talk to Sonic for a second. Sonic, are you going to trade the Jerome Powell event today? No, trade pros. Don't do it. Don't trade it. Be fast. Run away from the market. How was that? Good. Pretty good? That's good. All right, Sonic. The other thing that we could get is a balance sheet surprise risk. There could be an injection of new liquidity coming into the market. But the question is going to be, does that matter? Right? The liquidity isn't really going to support the stock market, but it does have bond market impacts. On the dot plot, it's likely going to be hawkish versus market pricing. Hawkish meaning that there's going to be more expectation for less rate cuts into the future. All right, the 2026 dot plot is expected to show only one cut. We were expecting to see 3 cuts next year. Now we're down to 1 cut. All right. And what does that mean? A hawkish dot plot plus a divided committee is going to equal to higher volatility. Why higher volatility, Sonic? Well, because the market has to reprice this new information. I don't think it's priced in yet. No, it's not priced in yet, Sonic. All right? And that's a very good trader instinct. You must know what you're doing. Come sit on my shoulder, buddy. We're going to do this update together. All right. Goldman Sachs says everyone expects a hawkish cut. S&P is probably going to be stable. And Bank of America's Hartnett says a dovish cut may actually be more bearish because long end yields could spike and hit equities. So it's kind of damned if you do, damned if you don't. The big question today is, we're going to get the cut. Is it going to be a dovish cut or a hawkish cut? The answer is, the bottom line for traders is this: we don't know. We don't have access to the data, and we're not privy to trading 1,000-lot contracts to move the market. Therefore, we're at the mercy of the market, and we got to adjust and take trades accordingly. This is why I skip volatility events. I let the big boys duke it out, and I pick up the falling pieces after the fact. Today might be a day to skip trading, but tomorrow and Friday are going to be epic. We're going to have a lot of volatility, a lot of movement, and a lot more stable price action. Bottom line, and this is what matters for traders, and I'll tell you the market move impacts and potentials if you still want to trade it. But remember, trade the live auction. Don't trade the expectation of what you think the market should be doing. Trade what the market is doing. Trade what the market is doing, guys. Forward guidance language is going to be the most important. All right. During the press conference from Jerome Powell at 2:30 and all of the release notes at 2 p.m., that's what's going to be the most important. All right. The number of dissents is also going to be important, Isaiah. And the tone. Can I just finish it with Sonic? Yeah. Sonic is on YouTube right now, buddy. Sonic and Friends, the show you watch. Blah. All right. So the tone regarding here. Bye, Sonic. Say bye to everybody. Bye, guys. Trade well. We should start our own Sonic YouTube channel, Isaiah. You want to do it? All right, cool. Ask your mom if you're allowed to go on YouTube. All right, so the tone regarding January is rate cut still a thing, and the hawkishness of the 2026 dots, all right, and any balance sheet purchase announcement. And this is where it becomes difficult because you have balance sheet, you have dot plots, you have the standard economic projections, the SCPs, you have the tone for January, you have the dissenters, and then you have Jerome Powell speaking in the conference. Yeah. What I said was, ask your mom if you could be on YouTube. We could start a YouTube channel together. Trader and his son. Yeah, you should ask if you could be on YouTube. We could start our own YouTube channel. Oh, maybe it's a family discussion. Not appropriate for YouTube Live. All right, so here's the tradable outcomes. If it's a hawkish cut, which is the base case, it's expected, then the US dollar is going to be firmer. All right, the yields are going to be steady and up. All right, Russell and SPX are going to kind of have a mild dip if it's a hawkish cut because they're disappointed. If it's a less hawkish than feared cut, you're going to have a relief rally. All right, yields are going to fall. Gold and crypto are going to get stronger. They're going to bid. But is that going to be sustained? All right, nothing after the Fed announcement is reliable enough to jump on board. If it's a spike in the price action, getting on board is too late. Oftentimes the fade trade is the better news. All right, and then after the fade, you're getting into the participation, the extension of the move higher. The thing with the Fed is whatever happens the Fed day is usually reversed the following day, and it goes further than where it came from. So if it's here and we get hawkishness and it dips, it's going to dip for the remainder of today, and by tomorrow we're going to be up above that level. Opposite is true if it is going to be a dovish. It rallies, and then the Fed fade comes in the following day. Just keep that in mind. But for today, trade the momentum and just be careful for the reversal that ends up happening. But you're going to have a lot of volatility into the closing bell. All right? That's that. You know what's happening if it's hawkish. You know what's happening if it's dovish. You know what markets are impacted. You know what's important. You know it's going to be crazy. The trading plan then for today is very, very simple. And I'm going to turn around to show it to you. Marco, your kid loves Sonic too. You know what? I told my son what the Sonic. I showed him what the Sonic video game used to look like, all pixelated, and I used to play Sonic on Sega. So it's fascinating to me that my boys are into it now. It makes me feel like I'm still a child as well. What's the difference between George and Bonds? Bonds eventually mature. That's a joke one of my classmates said at business school in a presentation. All right, trading plan. So yesterday we rallied off the open. Here, let me get the pen tool out because the pen tool is essential. Yesterday, we rallied off of the open price. All right, and we retraced back to the opening range high and extended up to 68.68, which for us yesterday was the flip zone. All right, we talked about that level. All right, and then we stalled out right near the flip zone. A perfect sign. What's that, buddy? Oh, that's my quick ladder. You want to show it to you, too? Isaiah just brought my quick ladder. I'm working on foot speed for hockey. You want to do some exercises, Daddy? Okay. You basically lay out the ladder, and you try to go through it as quickly as possible. It focuses on foot speed. We're gonna do it. You're gonna be faster than Sonic. That's how Sonic trains. That's how Sonic go fast. So yeah, we extended upward to our 68.70 flip zone, and we couldn't get bullish above it, which means we couldn't do the flip to get bullish. We got bullish enough to hit the flip zone, but not bullish enough to break and sustain that momentum. Therefore, the short trade was open and ready to go. So the short let us down into the lows of the day, and the team did catch a lot of that momentum. I disqualified myself from trading yesterday. Didn't really do much. All right. But great action on the 5-minute opening range and 30-second. You could see the 30-second and 5-minute were very similar yesterday. All right, the range was established upward. The first pullback to that range was tradable for quite a big point move. So, Pencho, you're most welcome, sir. Did that work out for you? Pencho says, I'm just jumping in to thank you for the 30-second open range idea. Not a problem. 30-second open range is one that floor traders used to use a lot. So that's the sauce there. That's from the floor trading days. It tends to set the tone for it's kind of like the biggest orders transact in the first 30 seconds, right? So it tends to set the tone for the session. So yeah, it hits the flip zone. We couldn't do too much with it. We sold off into the lows. Overnight, we huffed and we puffed, and we did set a lower level than the prior day low. Bearish development there overnight. All right, overnight high was below the prior day high, so it's all moving lower, but we're still dancing around the prior day cash close. So for today, I think the downside opens up below 34. All right, if we could hold it, we might be able to get a bullish case scenario for a long trade. I realize my camera is right in the way of all this just now, but you should have still seen most of it. All right, and yeah, the 34 quarter has to hold this morning, the overnight low that was set. I had a level there. It's a reason it stalled out. And you're looking to either buy the 34 for fade or for a break and retest of it to join the short. And on the top end, you're looking at 58 to 62 for either a short trade there or a break and retest for a run up to the 68.70 first target. And then above there, it's past yesterday's flip zone. We're going to get more chances for a bullish spike. I will tell you this, on Fed days, trends don't extend too much. There's a lot of options, open gamma positions that get hedged, a lot of changes of position during the market hours. And so just be careful. The reason I didn't do the options call and put walls this morning is because they change a lot during a Fed day, and they're not as reliable. But just remember this. If you're in a long trade and it's up 20 points, somebody with a bigger position than you is going to see that as an opportunity to sell some, and they're going to cap that rally. If it's dropping a lot, even though your trend and order flow and everything says it's a downward market, somebody with a bigger size position might say, hey, this is good, and buy into it and terminate that trend. Trends aren't going to stick as much. The key today is trading the first hour, 90 minutes, and then calling it and waiting to see what happens with the Fed. Tomorrow, Friday, is going to be a better opportunity. All right, that's what I think I had for you in today's morning market update. You know, pardon the distractions a little bit here, but I do work from home, and to me, when my kids talk to me, I listen. I love them so much. I can't just shoo them away, so I have to bring Sonic into it. You improvise. When you have kids, you learn to improvise, and you could now say that you learned about the markets from Sonic the Hedgehog. Take that in for a second. All right, lastly and not leastly, I wanted to say this. First hour is going to have some opportunities. Later in the morning, we get less liquidity, and things just quiet down for 2 p.m.'s announcement, 2:30 press conference. I'm not asking for much today from the market or expecting it because of what I told you about moves not extending. If I had to trade, if I don't have a trade today but use it as an info day and a liquidity injection for the Thursday and Friday, and that's when the opportunity comes, I'm okay with it. I don't have to trade every single day. The trade opportunity, I don't trade the trade. All right. And last but not least, before I look at the comments, January is going to be huge, guys. If you've been sticking around TradePro, and if you notice I've been more present, the present is I'm going to be even way more present in January. I got 3 big announcements in January of 3 big things coming, and we're going to ratchet this up to the next level. Like, we're only getting started, and I thank you guys for, being patient with me, and for those of you that know me from before I took a little bit of a break, I thank you for being with me since then, and the love and the support you guys have shown. It means a lot to me. I'm re-energized. I'm really excited for what I'm doing. I love you guys. I love this community and TradePro Academy. We got a lot coming. Michael, what's up? OTM. Sonic got the gist, Michael, right? Trading Fed would take it as a casino. I would set a certain amount of money to lose and lock it in if I lose. Marco, that's the perfect sentiment. If you're going to trade news, there's a little bit of an element of gambling in it, to be honest with you, because the market's really crazy. And it's not gambling, but the hard part is it pulls you in emotionally. So if you're the kind of person that says, I'm going to put $250 today to trade the micro contract, and I'm going to see what happens, fine. As long as if you lose $250, you stop. But if you can't control yourself after losing a little bit, and then you lose a little bit more, and then you lose everything you have in your account, and you don't think that's going to happen to you, but it does tend to happen to you in the past, what you think isn't going to happen today is going to happen. The market will get you right in the spot it needs to take all the money from your account. Trust me, especially on a Fed day. It's perfect at getting you to believe just enough before it takes all the money out of your pocket, and you won't even notice until 4 p.m. Still testing it makes a lot of sense. Great job, Pencho. I really appreciate you coming back to share that, and I'm happy it gave you some insight for something to test. That's all we're looking for as traders, something to test, right? Fed days are a casino. I'll play with the kid. Good call. My afternoon is going to be with my boys too. I'm going to take them out tomorrow. I'll be gone. I won't even be watching the markets. When the Fed thing hits, I'm going to read it in the news a little bit later. OTM, appreciate you. Marco, I'd love to make Sonic the official mascot, but it's copywritten. Maybe we'll do a Sonic toy that we alter, and we could call it Tonic. TradePro Sonic. Tonic. Then we get another character called Jin. And yeah, that's awesome, man. Vicky's an incredible trader. He started a TradePro Academy, almost 10 years ago, and knew nothing. I met him with a black eye, and his dad said, could you please help my son figure out his way in life? I didn't have to do much. Victorio just needed something to fall in love with, and it was trading and you guys. OTM, how does the 30-second opening range work? I'll share it with you really quick because I got to get in the room. Basically, it's the orange line here on this chart. The way it works is it's basically a high-low marking on the chart. As soon as the market opens at 9:30, and mine aren't actually super accurate, they're off by like a quarter point to a half point a lot of times based on the chart types I use. But essentially, the first 30 seconds of price action is all that matters for the study, and the study just plots the high and the low of the first 30 seconds. And the theory here is the opening balance orders are going to be the ones that drive the first move in the market. So if there's an overwhelming buy side, you're going to get a range that extends upward, and then that range, those orders that are in the book aren't done, right? We assume that the auction's done just because the orders are done, but there might be a bigger buyer and more buying to happen. Therefore, the upside's the right side for the first part of the day. It's not forever. It's just the first move is going to be upward. So the theory is this: the first 30 seconds of price action could dictate the momentum for at least the first part of the day. It works good. When it doesn't, it sucks. I could show you the strategy. I used to trade the strategy quite a bit. It's a successful one. You just got to be careful how you do it. The biggest disqualifier is the range days. If you could figure out how to remove the range days, this is a great trending day strategy worth its weight in gold, especially the retest of it. All right, that's all I got. I got to get in the room. I love you guys so much. And what else was I going to say? Yeah, that's it. I love you. I got a lot of announcements in January coming. I'm going to give you a hint of what is coming tomorrow. I hope you'll be excited. You guys take care. Have a great rest of your day. Careful, it's Fed day. Morning time's opportunity. Late morning, like tone it down. Afternoon, it's going to get wild. If you like to get wild, you're probably younger than me. I don't like wild. Wild, never thought I'd say this, but wild is scary. Help me, guys. I'm aging. Take care. Bye. Yeah, OTM orb. It'll be used as an orb. I came back to say that.